Most traders think they have one problem. They're wrong. They have seven. 7 psychological loops that repeat on and on until their account is destroyed. And the scariest part? They don't even know they're in the loops. I've identified all 7. And if you want to escape them, you need to watch this video completely. Do yourself a favor. Watch this entire video. Because if you're not willing to invest 15 minutes, you're not patient enough to make it in trading. Remember that. Patience in learning reflects patience in trading. Here's what you'll learn in the next 15 minutes. Loop 1. The attachment loop. Why traders can't exit. Loop 2. The revenge loop. Why losing trades lead to bigger losses. Loop 3. The FOMO loop. Why traders chase what they already missed. Loop 4. The denial loop. Why traders can't admit they were wrong. Loop 5. The oversizing loop. Why traders risk too much when scared. Loop 6. The overconfidence loop. Why winning trades make traders reckless. Loop 7. The pattern loop. Why the same mistakes repeat forever. Each one destroys accounts. Each one is completely psychological, and each one can be broken if you understand it. Most traders never understand even one loop. You're about to understand all 7. Before I break down all 7 loops, here's the truth. Most traders are trapped in multiple loops at the same time. They're trapped in the attachment loop, so they hold losers. Then, they're trapped in the revenge loop, so they overtrade. Then they're trapped in the FOMO loop, so they chase prices. And suddenly, their entire account is destroyed, not by one mistake, but by a combination of loops, all playing out together. The good news is that once you see the loop, you can break it. Once you understand the psychology, you can escape it. That's what this video does. It shows you all 7 loops so clearly that you can't miss them in your own trading anymore. Loop 1. The attachment loop. This is the most destructive loop in trading. Here's how it works. You enter a trade. You feel smart. You feel right. You feel like you made an intelligent decision. Then, the trade goes against you. Your brain says, "No, you were right. The market is wrong." You become attached to being right. So you hold. Price keeps declining. Your attachment gets stronger. Because now you've admitted you were wrong. And you can't handle that. So, you hold more. Days pass. Weeks pass. Your account bleeds. Finally, you exit at the worst possible time because you couldn't handle the loss. The attachment loop. Enter. Be right. Wrong. Attach to being right. Hold. Lose more. Destroy account. The loop repeats. Because traders are addicted to being correct. They're trading their ego, not the market. Loop 2. The revenge loop. This loop usually starts after loop 1. You just took a big loss because of the attachment loop. Now you're angry. You're frustrated. You're hurt. And your brain says, "I need to win this back." Immediately. So you take bigger trades. You size up. You stop following your rules. You're trying to revenge trade. And the market punishes you again. Because you're trading from anger and desperation, not from logic. The revenge loop. Big loss, emotion, bigger trade, bigger loss, more emotion, even bigger trade. Account destroyed. This loop kills traders faster than any other loop because each cycle gets progressively worse. Larger positions, larger losses, more desperation. Most traders who blow up their accounts blow up because of the revenge loop, not the initial loss. If you recognize this loop in your own trading, subscribe right now, because understanding these loops is the first step to stopping them. Loop 3. The FOMO loop. Fear of missing out. You miss a move. You see a stock already up 20%, and your brain says, "I missed it. If I don't get in now, I'll regret it." So you chase the price. You enter late at a bad price. The stock reverses. You panic and exit at a loss. Then you watch it drop back down, and you regret chasing it. So, the next time you see a move, you chase again. The FOMO loop. See move. Panic. chase, enter late, reverse, exit loss, repeat. This loop is based on scarcity. Your brain thinks, if I don't act now, I'll lose this opportunity forever. But professional traders know the truth. There will always be another move. The best trades aren't the ones you catch. The best trades are the ones that fit your system. Loop 4. The denial loop. This loop is subtle, but deadly. You're in a trade. It's going wrong. But instead of admitting it, you rationalize. This is temporary. The fundamentals are still good. It's just volatility. Big investors are accumulating. Your brain is creating reasons why you're not wrong. This is denial. You're denying reality because admitting reality means admitting you made a mistake. So you hold, you wait, you hope, and the more you deny, the bigger the loss becomes. The denial loop. Wrong trade, deny, rationalize, hold. Bigger loss, more denial, catastrophic loss. Denial is different from attachment. Denial is your brain protecting you from shame. If you admit you were wrong, you feel shame. So your brain creates narratives that let you stay in the trade. The problem is that the market doesn't care about your narratives. It just executes. Loop 5. The oversizing loop. Most traders start with good position sizing. Small positions. Following the 2% rule. But then something happens. They start winning. And their brain says, I'm good at this. I can risk more. So they size up. Positions get bigger. Risk gets bigger. But so does potential loss.
Then they hit a drawdown, and instead of shrinking positions, they size up again, because they think, if I size up, I'll win back my losses. But larger positions means larger losses. The oversizing loop. Good sizing, winning, confidence, size up, drawdown, panic, size up more, bigger losses, account destroyed. This loop is psychological because it's based on false confidence. After winning, traders think they're better than they are, so they risk more than they should. If you've been stuck in any of these loops, like this video, because the next 3 loops are just as destructive and you need to see them. Loop 6. The overconfidence loop. This loop works in reverse of what you'd expect. After 3 winning trades in a row, your brain says, I understand this market. I have an edge. Your confidence skyrockets. And instead of sticking to your system, you start improvising. You take trades that don't fit your setup because you feel it. You size up because you think you can't lose. You hold longer because you think you know where the market is going. And then you get blindsided. The market moves in an unexpected direction. You lose. The overconfidence loop. Win, win, win. Overconfidence, improvise, breakdown, loss, back to humility, repeat. This loop is insidious because you think you're improving. You're actually just getting cocky. The market will humble you every single time. Loop 7. The pattern loop. This is the meta loop, the loop of all loops. This is when a trader repeats the exact same psychological mistake over and over, never learning. They take the same revenge trade. They fall into the same FOMO trap. They hold the same attachment positions. Same setup, same mistake, same loss, forever. The pattern loop happens because traders don't diagnose their mistakes at a psychological level. They think, I made a bad trade. They don't think, I made the same psychological mistake I made 3 months ago. So they never learn. They just repeat. And suddenly they've been trading for 5 years and they're still broke because they're stuck in the same psychological patterns. The pattern loop is the reason traders give up, because they can't see that all their losses trace back to the same psychological issue. Now that you understand all 7 loops, here's how you break them. Step 1. Identify which loop you're in. Are you attached to being right? Attachment loop. Are you trading in anger? Revenge loop. Are you chasing what moved? FOMO loop. Are you rationalizing? Denial loop. Are you risking too much? Oversizing loop. Are you overconfident? Overconfidence loop. Are you repeating patterns? Pattern loop. Step 2. Stop the immediate trade. If you're in a loop, the answer is the same every single time. Exit the trade. Stop the bleeding. Step 3. Diagnose the psychology. Which loop are you in? Why? What triggered the psychology? Understand the trigger. Step 4. Build a rule that prevents the loop. If you're in the attachment loop, create a rule. I exit at stop, no exceptions. If you're in the revenge loop, create a rule. I don't trade when angry. If you're in the FOMO loop, create a rule. I only trade my pre-planned setups. Step 5. Follow the rule until it becomes automatic. This is the hard part. This is discipline. But this is also where transformation happens. Here's the most important thing I want you to understand. These 7 loops are not unique to you. Every trader goes through them. The difference between the traders who succeed and the traders who fail is simple. Successful traders recognize the loops early and break them. Failing traders stay in the loops for years. You just learned to recognize all 7 loops. Now your job is to notice when you're in them and break them immediately. Your biggest edge in trading isn't indicators. It's not strategies. Your biggest edge is psychological awareness. If you can see the loop before it destroys you, you can exit and survive. If you can't see the loop, you stay in it until you're broke. This video just gave you the awareness. Now, the work is yours. If this video helped you see yourself in these loops, do 3 things right now. 1. Subscribe, because next week we're breaking down how to build the exact rules that stop each loop. 2. Like this video. Help other traders find it. 3. Share this with a trader you know who's stuck. Your share might save their trading career. And comment below, which loop are you in right now? I'll see you in the next video.